If the suppression and the manipulation is removed, at least for the short time, and there's all this immense pressure to the upside, the best way I can describe it is it's keeping a beach ball underwater. With Bitcoin, when it gets really hot and Bitcoin goes down, for example, 20%, which it did in that period of time, in the span of a few short hours, it's because there's no centralized circuit breakers that can be putting on to halt trading. It's a 24/7 permissionless asset.
We have no say in what goes on geopolitically, right? What we do have is this ability to start storing our financial energy, our savings, our superannuation, our capital, rotating out of legacy assets that maybe have had their time in the sun.
Morgan Stanley Wealth Division is now recommending to their clients a 2 to 3% allocation in Bitcoin for all their high net wealth investors. Bitcoin's a savings account. Bitcoin's my cash. Bitcoin is my primary asset on my balance sheet. The price of one Bitcoin 6 months ago is the price of two today. So get your Bitcoin.
Today I'm excited to welcome back to the show Bisher from Stormrake. Stormrake is one of Australia's fastest growing Bitcoin brokerages, handling tens of millions of dollars worth of Bitcoin trades every single month. Bisher is one of the most knowledgeable guys in Bitcoin, not just in Australia, but globally. He understands the macro, what's happening in the financial system, the geopolitical, but also he operates right at the coalface. As you can imagine, running a very busy trading desk. He's having conversations with real people every single day who are coming in and out of Bitcoin. So I couldn't think of a better time, Bish, than now to have you back on the show. It's been probably, I think, 7 or 8 weeks since we last got together like this. And I'm really looking forward to your insight. I'm hoping that the viewers are going to get tremendous value from this conversation, mate. How's things? Welcome back.
Thank you for having me back, man. What a privilege to be here. And last time I got to see you, we were on a beautiful rooftop pub out in Coolangatta. So it's I prefer that setting than the podcast setting, but another beverage is due soon for sure.
Enjoying a crispy ale in the sunshine we were, but
back to Melbourne
awesome
now,
stuff.
Back to the trenches.
And Bishop, it's changed for you in the last few weeks. You became a dad for the third time.
Yes, been blessed with my third child. I've got 2 boys now and a beautiful daughter who's my middle child. And yeah, it's just been keeping us busy because, but I'm already a nocturnal individual because all of the price action really happens in America. So I'm already up at like 1 a.m., 2 a.m., seeing a majority of the price action occurring in the United States. So when Bub is crying at night, it doesn't really disturb my slumber. Right. I'm already up and about.
Good stuff, mate. That's great to hear. So, Bish, I thought we'd jump straight in with obviously the current conflict going on around the world. We've seen Bitcoin come off about, 45-50% since its all-time high, and we're kind of just chopping sideways at the moment in terms of its price. How do you see this current conflict that's going on, this Iranian situation, and the market's reaction to it, and what it means for Bitcoin moving forward?
Well, the initial reaction was to be expected. Bitcoin sold off and touched 62,000 at one point. What I'm quite surprised by is the response afterwards. On the Saturday, in terms of when the war had actually broken out, we got to a low of 63,200. We were making our way to that 62K handle. And then we started to turn around. It was meant to be, I think it's called Operation Epic Fury. It was meant to be resolved by the weekend so that when the markets open on Monday, that there shouldn't be too much disruption to oil markets. But now the Strait of Hormuz, which is a tiny narrow gap in which almost 20% of the world's oil flows through by shipping tankers, large oil tankers, has now been closed off. There's no ships going in or out. That's a huge disruption to oil markets, and oil has responded as you can anticipate. It's ripped to the upside. I mean, the oil's on an 85 handle at the moment. But Bitcoin has turned around 17% off the lows of since it's all kind of kicked off, which is, really caught me offside because for me, Bitcoin has always been a neutral safe haven asset, but it hasn't traded like that for 5-6 years. So when the initial conflict headlines hit the news, hit the tape, we saw Bitcoin trade as we anticipated, which was to the downside, and gold was the safe haven that caught a really strong bid. Since then, actually, what's been quite interesting is that gold has actually tracked sideways for a little bit. In fact, traded down about 5 to 6% since the conflict had headlines had kind of died down, and Bitcoin is ripped to the upside, currently holding at 72.5. So that was to be that did catch me offside, to be honest with you. However, we could be seeing a short squeeze at the moment because everybody piled in expecting Bitcoin to break the 60 handle on the onset of this war. And what the markets did was liquidated those who had positioned themselves for short orders. But then, at the same time, we have seen Morgan Stanley now issuing a Bitcoin ETF that came out last night. Kraken now has a Fed master account, which is huge, means that they're directly plugged into the Federal Reserve banking system, directly into the plumbing of the US financial markets. And President Donald Trump has come out, amongst other things, tweeting about Iran, coming out saying that the banks must allow the Clarity Act to pass and that they should not be being an impediment towards American economic freedom, and that Bitcoin and crypto, they called it a crypto agenda, must not be stopped. There's so much going on in the macro space outside of the geopolitical conflict that's evolving in the Middle East as we speak. There's a lot that's happening on a regulatory front, and the Clarity Act coming through, plus bigger players coming into Bitcoin via Morgan Stanley, for example, really shows you that this is an asset class that is deeply entrenched into the financial markets, and that the doom and gloom posting that everybody was pushing out was extremely misplaced, and that BTC is now more likely to hit 90,000 than it is to hit 40,000 at the moment. Of course, there could be escalations in the Middle East. There could be further complications in other parts of the world that drags in, say, Asian theater, for example. The South Korean stock index, for example, which is known as the Kospi, was down 25% at one point in one day, right? Because there was concerns that North Korea and South Korea might get after it. All eyes are on Taiwan as well, because China might make a move on Taiwan whilst the Americans are caught up in the conflict in the Middle East. So there are some genuine geopolitical concerns around escalations. But with that all said, it pays to be bullish over the long term. And that's what I've loved about your messaging with your clients and your audience, has been to just stay cool, calm, and collected, and to keep stacking sats, because eventually the markets are going to resume their bullish uptrend. And what's the alternative, mate? The Iranian rial went to zero. The US dollar is getting hyperinflated as we speak. They are nearly going to hit $39 trillion in national debt. And on top of that, they have to refinance a third of their debt this year at levels that they had taken out near 0% interest rates. So, and they're spending nearly $1 billion a day to fund this war, about $800 million a day to fund the war at the moment. So, it goes to show you that when you position yourself in hard, scarce assets, whilst the volatility might be high, the value always accrues to the upside, which is why we've seen Bitcoin now trading in the low 70s. We're not out of the woods yet. We would like to see a break of 73.5, but all things considered, we're trading exceptionally well considering the ongoing climate.
Yeah, that's a really great summary, mate. And would you say that over the past, let's say since October, where everybody was, I guess, fairly bullish heading into the end of the year, we all kind of expected Bitcoin really to continue to run. Is there anything that sort of really surprised you out of the box over the past 6 months that's kind of sees us where we are now? Yeah, what would you say to that? If you're ready to become truly self-sovereign, join my Bitcoin Success Circle. This is my private mentorship community. And inside the circle, you'll get one-on-one coaching from me, access to our 6 modules of recorded training, and you'll be connected with our growing community of like-minded Bitcoiners. This is a really powerful place to be, and everybody who's joined the circle is absolutely delighted that they did. Now, when you join us inside the circle, you'll gain immediate access to our membership portal. And inside the portal, you'll find our 6 modules of recorded training. The first 3 modules I co-host with Mr. Bisher Khudeira. He is COO, Chief Operating Officer at Stormrake. Second half of the training, I co-host that with Mr. Tony Yazbek. He is founder of the Bitcoin Way. So all of this is inside the program. I know you're absolutely going to love it and get tremendous value from it. With that said, I'd love for you to join me. You won't regret it. and I'll see you inside the circle?
It's a great question. I mean, look, the 10th of October, I did not anticipate that at all. I'm not going to be putting my hand up and saying I would have seen crypto's largest liquidation event in history. I mean, FTX, when it occurred, was just shy of $2 billion. And the event that occurred on October last year was $20 billion, factor of 10x larger. So I didn't anticipate that, to be honest with you, especially being a week after when we had hit all-time highs. The thing that also I'll make mention about this, though, just before I kind of elaborate on how markets have traded since then, is that we don't have any circuit breakers, right? So when the South Korean stock exchange, when people were concerned about North Korea firing on South Korea, when the market got really hot and was breaking down, it went down 10% in an hour. The stock exchange closed. So they've got these things called limit breakers, right? And these circuit breakers kick in whenever there's a 10% move up or down. They give it a few hours to cool off and then they open it up again. It hit a second limit circuit breaker shortly after opening up and they halted trading for the day. So you couldn't actually buy nor sell any South Korean stocks, names such as Samsung, for example. That was completely removed from the table. Whereas with Bitcoin, when it gets really hot and Bitcoin goes down, for example, 20%, which it did in that period of time, in the span of a few short hours, it's because there's no centralized circuit breakers that can be putting on to halt trading. It's a 24/7 permissionless asset. We can send and receive at any time, and we can trade it at any time as well. So that exacerbates the volatility because we've seen a lot of volatility in the Middle East. Emirati Stock Exchange, for example, the Dubai Stock Exchange halted trading for 3 days. 3 days, no trading. Could not buy or sell a single Dubai stock, right? You don't have the ability to access it because it's all centrally cleared. And so you can only trade on the permission of the Dubai Stock Exchange operators. And so Bitcoin doesn't have that. You don't have to have permission to trade it. You don't have to have permission to send it. You don't have to have permission to receive it. It's permissionless trading, permissionless investing, and permissionless peer-to-peer cash. And so when you have that kind of fundamental mechanics as the backdrop of your market, you can get really high volatility and no breaks. And that also works to the upside as well. So when the market rips up like we had seen over a short period of time, 8% in a day, then there's no limit breakers, right? If we go up 20% in a day, there's nothing stopping us from ripping to the upside. What did surprise me was the decoupling that Bitcoin had with the NASDAQ, which is the US tech index, the top 100 tech companies in the United States. We decoupled from that. We also decoupled from the S&P 500, where the S&P 500, which is the 500 largest companies in America, they went on to make new all-time highs, mainly driven by what is known as the Mag 7 or the Magnificent 7, NVIDIA, Amazon, Tesla, the big ones, Alphabet, they're the ones that were driving the results. So when you see that happening and you see the underperformance of Bitcoin against gold, silver, S&P 500, technology stocks, that was what really caught me offside, because in macro land, if we were to have Bitcoin ripping to the downside and it was correlated with a wider corrective move that was going on within the S&P 500 or going on within the US tech sector, that is a little bit more understandable because we have been correlated to technology stocks and we're seen as a high beta risk play, then that would have made more sense. But the fact that both the S&P 500 and the NASDAQ had excellent years, closed up 16% and 18% respectively. NVIDIA had some of its best year on record. Gold and silver had its best years on record since the 80s. When you see that and that chronic underperformance that we had seen in Q4 2025 and Q1 2026, which we're currently still going through right now, was a bit painful to go through, because I would have expected that if Bitcoin was selling off as hard as it was, and we've had 5 months of straight red, October red, November red, December red, January red, February red. We haven't had 5 months of red straight since 2018. So we're having similar buying opportunities to what we had seen in the 2018 bear market. At that time, Bitcoin got to a low of $3,000. It got to a low of $60,000. It goes to show you how much we've matured as a market. If you compare it low to low over that 6-year period, it's still an astonishing rate of return, over 20x return from low to low. But we obviously people are quite feeling it, right? Because a lot of entrants came around that 110, 120 handle. It's come down now to 60,000, and a lot of folk are feeling the pinch. Not so much now that we're at 72, 73, but still, feeling the drawdowns. So I would say to folk who are feeling a bit despondent about the market underperforming gold, underperforming silver, underperforming the US technology sector, underperforming the S&P 500, not to feel too despondent. We've been here before where there has been secular bear markets in Bitcoin and cryptocurrencies, and then we have resumed our bull trend and we massively outperform the TradFi and legacy sectors in the following months and years. So when you look at things like Kraken being plugged straight into the Fed master account system, you look at Morgan Stanley getting access to and giving access to its investors via Bitcoin ETFs that they manage themselves. You look at the fact that the Morgan Stanley Wealth Division is now recommending to their clients a 2 to 3% allocation in Bitcoin for all their high net wealth investors. You start looking at things like inflows into the Bitcoin ETFs hit a 5-day record peak of $1.5 billion for the last 6 months, right? When you couple all of that with everybody screaming for 40,000, 30,000, and the onset of the Iranian conflict, and we're at 72, that's the market telling you something. And again, I'm not saying we're out of the woods. I'm not calling for new all-time highs. I'm not saying that we're going to rip to 100,000 in the next few weeks. I'm saying that let's have a cautious optimism heading into what really looks like the first set of a nice bullish period that we haven't experienced for 6 months. And you cannot understate how important it is to get bullish after 5 months of pure red. 5 months of red that we haven't seen since 2018. That was a chronic period of underperformance. 2018 was a disastrous year for Bitcoin investors.
84% drawdown.
Yep. Correct. But if you had taken advantage of that drawdown, of that correction, and accumulated Bitcoin, you would have accumulated Bitcoin at 3K, 5K, 7K, 8K, 10K, levels that people would consider generational entries now. Will be the same said about people who was able to accumulate Bitcoin at 60, 65, 70. Whilst we're not completely out of the woods, but let's say we even, the war escalates and we go down to 55 before we really rally. Whether you buy at 55, 60, 65, 70 before we go to half a mil over the next 8, 10, 12 years, you're not going to really fuss that much, especially if you bought at 3K or 5K or 7K, and we're now at 60,000, 72,000 at the time of recording. It's not going to make or break your portfolio. It's just about getting in position and knowing what you hold.
Yeah. No, I love that, mate. That's a really good summary as to what's going on around the world. And, I think what we're seeing, and I'd love to sort of come back to this in a moment, but this transition or this shift in Bitcoin ownership from individuals to the big end of town, to the institutions. But right now, like, what would you say on the trading floor, Bish, is the overall kind of underlying sentiment? Are they stacking? Are they buying Bitcoin? Do you see a difference between newbies coming into the space versus sophisticated hodlers who have maybe been here a while? What are the kind of conversations and that you guys are having with people right now, with clients?
The three main conversations that we're having right now is, one, we have $5 million worth of limit orders sitting at 60,000 right now, right? And we're still seeing massive interest in coming into the space. It's just people who are anticipating lower prices. Whether they get those lower prices or not are yet to be seen. Oftentimes greed works both ways. Greed works on the way up, where people want to just get in and FOMO in and they just want to buy, even if we're at all-time highs. And then second way is when we have a severe 50% sell-off and a 5-month drawdown, people are expecting lower, so to buy more essentially. So greed works both ways, right? So that's the number one conversation we've been having, which is we're still seeing massive interest in Bitcoin at the moment. People are coming in size, in serious size. We're getting, $500,000 to $250,000 worth of deposits in every single day from some of our largest holders, right? And, and this is also, keep in mind, Zane, these are deposits that maybe are 20K, 50K, 100K. So it's not like one individual putting in $500,000. There's some serious interest out there. Obviously, granted, a lot lower than where we were in October 2025 at the start of it, but still people are coming in, they're buying Bitcoin through their self-managed super funds, they're buying Bitcoin in family trusts, and they're buying in size. But they're anticipating lower prices. The second type of conversation that I'm seeing a lot of on the desk is people are actually quite bullish on Pax Gold. People have been trading gold a lot with us, and that obviously has been something we've been listing since October as well. Granted, in that time, if I have a look at how we've gone in gold over the last 6 months comparative to Bitcoin's last 6-month run, is we're up 44% in 6 months in gold, and in Bitcoin over the last 6 months we're down 34%. So it doesn't surprise me that we've seen this massive uptick in gold volumes on the trading desk, because that's just where the performance has been recently. And then number 3, the most popular conversation we've been having is dollar cost averaging, because something we've been seeing with a lot of large holders is they're coming in and buying on a frequent basis, and they're not deploying capital at, say, $500,000 in one go. If they've got $500,000 to deploy, they're buying $20,000 to $25,000, $30,000 a week. So those are the 3 main conversations I've been seeing on the desk. Large limit orders waiting for 60,000 or lower, large gold buying occurring through Pax Gold, which is a gold offering we have on the desk. And then the third one is sizable dollar cost averaging occurring at the same time. So those are the big 3 chats that we're having. So it doesn't seem like the industry is dead, because going back to 2022, when it was just myself and my 2 business partners, there was no conversations going on. The phones were not ringing at all. I would beg people to have a 10-minute conversation with me. I'd be like, please speak to me. Now, there's plenty of phone calls, plenty of conversation, but it's more so waiting for lower prices, dollar cost averaging, and buying some Pax Gold.
Yeah. And of course, there's no guarantee the price is going to dip further, right? So,
Correct.
This is the thing about Bitcoin, and what I always say, if you just zoom out and you've got that, 5-year plus time horizon, and you're here for at least one full cycle, which is really, you shouldn't be coming into Bitcoin unless you've got at least a 5-year time horizon, in my view. And this really comes back to how much work have you done in the beginning? How many books have you read? How many podcasts have you listened to? How much of an understanding of the fundamentals of Bitcoin do you have before you actually start investing in it, before you start stacking? Because at the end of the day, Bish, and I know you agree with this, we have no say in what goes on geopolitically, right?
No, zero.
But what we do have is this ability to start storing our financial energy, our savings, our superannuation, our capital, rotating out of legacy assets that maybe have had their time in the sun, right? Like we're seeing more and more people starting to exit, for example, real estate, who have owned it for a long period of time, and they're starting to see this influx of regulatory change and taxation and all this stuff coming down the pike, and they're going, well, I'm out of here. I've had my gains in the real estate. I'm going to start parking my capital into Bitcoin. So, just understanding, guys, that Bitcoin being a decentralized asset, a place for us to park our capital and to kind of look towards the future. I mean, that's the way I see it right now. I think that the big play for everybody right now who understands what Bitcoin is to just park their savings there as much as they can with a low time preference, long time horizon, and just sit tight and just keep stacking. You often say, Bish, go about your craft, earn an income, take care of your family, and every time you got some spare savings, spare capital, if you believe in Bitcoin like I do, and like you do, Bish, that's the place to park it, wouldn't you say?
Absolutely. I mean, for us, Bitcoin represents more than just a tool for speculation. We use Bitcoin in our day-to-day lives. I'll be going to America, and I'll be seeing you there, which should be a lot of fun, and we'll be in Vegas for the Bitcoin conference. I'm not traveling with Aussie dollars, and I'm certainly not going to get ripped trying to convert my Aussie dollars to US dollars at airports or even outside of the airports. I'm just going to get killed on the foreign exchange. So I'm just going to convert my Bitcoin to US dollars wherever I need to, and also spend my Bitcoin wherever it's accepted in America. And that's a really powerful position to be in, because I don't have to worry about where I'm going to get my liquidity from. I don't have to worry about how my savings is going. I don't have to trust the commercial banks are going to give me a good rate on my foreign exchange conversions. I know that they're going to charge me 8%, right, to buy and then to sell back the US dollars later on. So I'll be stitched 16% just to go and get myself some US dollars when I'm in a foreign country to be able to spend their local currency.
Whereas it's just criminal.
Whereas with Bitcoin, you spend 1 or 2 percentage points and you can get yourself American dollars, you can get yourself Thai baht, you can get yourself Indonesian rupiah when you're in Bali, you can get euros when you're in Europe, GBP when you're in the UK, and you'd pay the same 1 to 2% spread that you would be going anywhere in the world, regardless of what currency you're converting into. So for me, it's like Bitcoin's a savings account, Bitcoin's my cash, Bitcoin is my primary asset on my balance sheet. It serves so many different functions in terms of how it enriches my life, and it gives me a lot of freedom and flexibility. My missus now wants to get a bigger car and she wants to upgrade. She's had an Outlander now for 5 years. Now with baby number 3 settling into the routine, she wants to get a bigger car. She wants to go towards like a Pajero or a Land Cruiser. The Outlander's too small now. Okay, no worries. Sell down some Bitcoin and then get her the new car. Happy days. Like, that is the freedom that I have, and that we want all of Zane's community to have as well, because everybody deserves to have a savings account, but we haven't had one in Australia for such a long period of time that the only natural thing to do, in my humble opinion, is go towards Bitcoin and use it appropriately. Now, for folk who have just gotten into the space, using it as a savings account may feel a bit foreign because of the volatility, but you can start small. Get yourself half a Bitcoin, 1 Bitcoin, 2 Bitcoin, and keep stacking. The way I like to say it is that you can buy 2 Bitcoin with me today for the price of 1, as where it was 6 months ago. When you have that kind of shifting of mentality and framing, is that how much do you like Bitcoin? Yeah, I don't mind it. I like it as an asset, but it's very volatile. Okay, what if I can give you 2 Bitcoins for the price of 1? Everybody says yes. Great. The price of 1 Bitcoin 6 months ago is the price of 2 today. So get your Bitcoin, right? If I was selling scones, or if I was selling cinnamon scrolls at Baker's Delight, and I was putting on my Baker's Delight cap and said, come and get your cinnamon scrolls 2 for 1, people would be lining up outside the door to get twice as much as what they could have last week when I didn't have my specials on. So, you got to apply the same mindset towards your investment assets that you would with your consumer products. You would, if you were to see JB Hi-Fi going 2 iPhones for the price of 1, you'd go out and buy 5 iPhones. You don't need it all, but you'll be buying them, and then you might on-sell it to someone else, or you might give one to your brother, your sister, your mum, give them a new iPhone. But that's the idea, is that people love consumer discounts. They don't like investment discounts. And I say to my investors, just switch it around. If you were going out and you were going to JB Hi-Fi, or you're going to Baker's Delight, or you're going to Woolies, and you see your favorite item marked down by 50%, what are you going to do? You're going to buy a lot of them, right? I'm a Kinder Bueno man. I love my Kinder Bueno, right? So does my son, so does my daughter. If I see Kinder Buenos on discount at Coles or Woolies, I'll buy 3 or 4 of them, 5 of them, when I might have been in the market for 1. Do the same with your investments, and you'll do a lot better over time, because you don't want to be applying a consumer mindset towards your investments. Where if it goes up in value, wow, it's so great. If it goes down in value, it's bad. Apply that logic of going, okay, it's on a discount, I can buy more. Happy days. That's a good position to be in.
So would you say, Bish, just on that point, that right now the people who are just smash buying, leaning in, deploying capital into Bitcoin, they're more kind of people who have been here for a while, they've kind of seen this movie before, maybe they're a bit more sophisticated in terms of their ability to ride out volatility. Would you say that that's, who this sort of buying opportunity appeals to most right now? And it always intrigues me, like, why is it that the average retail investor, why is it they want to chase green candles and come into an asset when it's ripping, 110, 120, 100, and yet when the thing dips, they just run for cover. I really struggle to try and get my head around that.
It's also about the speed of the sell-off as well, and how quickly the volatility can hit in Bitcoin, right? So if your favorite asset, for example, most people are used to their property prices going up or down a few percentage points, 10% in a good year, down 3% in a bad year. or they're used to seeing their stock portfolio swing, a few percentage points here or there. They're not used to the volatility or the rate of change that Bitcoin can go through, where you feel like $1 million when it's at 120 and you just feel completely devastated at 60 5 months later. I think that's what really catches a lot of people off guard, right? I don't think that, like, most of our retail investors are okay with the volatility, especially in an uptrend where Bitcoin's going up and up and up. It comes down 10, 15% and then resumes its uptrend. None of my investors have an issue with that. None of your investors would have an issue with that. And then it's when it goes down 10% and you buy the dip, and it goes down another 10%, you buy the dip, and then it goes down another 10%, you're out of dips. Yeah, you've got no more clips to buy the dip. Your capital is expended, and then it goes down another 25% from there. It's kind of, that's where the heart sinking feeling comes through, where it's like you feel like the thing has no bottom, and it's like going to keep on sinking, and then you're just like looking at this thing where you think that you extrapolate out that it's going to be going, if the current trajectory continues, we'll be at zero in 6 months, right? Whereas people were doing the inverse 6 months ago, where we're at 120,000, we'll be at $1 million in a year from now, and it's like, I always say, don't want to extrapolate the moves, because I think that, a lot of investors, when the market is in an uptrend, will always assume the uptrend continues forever. And then when the market's in a downtrend, assumes that the, that the downtrend will continue forever. Whereas I say there's a middle path where uptrends are healthy and they'll have corrections along the way. Downtrends, which we're in one right now, we're in a bear market, will also have, bounces, which we're experiencing right now. But regardless of whether you're in a bull market or a bear market, an uptrend or a downtrend, what is it that you're actually holding? That's something that I really focus on with yourself, because yes, the volatility is going to be high, and that's what I think catches a lot of investors off guard. Even though you tell them to go into it with eyes wide open, they still kind of get caught offside by when the volatility really does come through. Because on paper, people are like, yeah, I can handle the volatility, and then it hits, and it's just completely different when you're actually living through it. So that's number one. Yeah. And then number two, you don't want to be in a position where, when Bitcoin's in a bull market, you assume that the bull market will go on forever, and you don't want to be in a position where, when Bitcoin's in a bear market, which we're experiencing now, assume that it will go on forever and we'll never see new all-time highs. I've seen this occur time and time again, where we get maximum pessimism at the bottom and we get majorly optimistic at the highs, and that, it's almost always somewhere in the middle. And even now, more recently, with this downtrend, people are expecting us to go towards 30,000, 35, 40K. And I'm like, look, it's more likely that, we've hit at least a local bottom. I'm not saying the absolute pico bottom of the bear market, but we've had 5 months of relentless selling. I think a bit of green is due, right? And that's what we've seen now. So again, but it comes down to what people's accumulation plans are. Are you buying in a self-managed super fund where you're holding for the next 20, 30 years? Are you buying and you're planning on retiring next year? That's a different outlook. Are you somebody who's got a thriving business and you've got good cash flow coming in? Those are the considerations you have to make when you're adding Bitcoin into your investment portfolio. It's great. It's awesome. It'll supercharge your returns, but there's volatility there as well. So you have to understand what role it plays within your portfolio, and don't kid yourself into believing that you can stomach the volatility, or don't kid yourself into thinking that this asset's going to go down, and therefore sell. You want to avoid the extremes and focus on where the value is.
Absolutely. And I think everything you shared there, Bish, really speaks to the power of dollar cost averaging over time, if you can do that. But like you said, you've got to make sure that you've always got that ability to just deploy consistently, kind of methodically. And sometimes, people just, if they smash by all their capital and there's no capital left, they can't take advantage of these dips like we're experiencing now. Yeah,
correct.
So, something you want to add there, mate?
Well, I mean, look, when it comes down to volatility, it's something that I think can be taken advantage of, right? I think that we want people to realize that the markets are going to be here for a very long period of time. We don't want folk to feel like Bitcoin and its volatility is something that they can't take advantage of, that it's just like a downtrend that's going to be continuing on forever. The volatility is what actually gives you these excellent entries. It's what gives you the opportunity to enjoy wealth beyond measure. You just have to slow down your extrapolations. You have to slow down the fear and lean in with it. Because I think, look, from my perspective, BTC can do so much more than just be an asset that just sits in your portfolio and you're tracking the reds and the greens, right? What's my P&L? Am I up? Am I down? You can certainly do that. And I'm not saying don't track your investment returns with Bitcoin. I encourage that. But learn how to use Bitcoin. That's something that, I love what you advocate for, is that it's not a static, inanimate object. It's not real estate. Real estate, you just have to sit on it. Maybe you borrow more against it. Maybe sometimes you do a knockdown rebuild. Who knows, right? But you can't be liquid with it. You can't use it as money. You can't travel with it.
It's not portable. Yeah.
It's not portable. It's not divisible. So what I say to my investors is that, yes, track your investments, track how you are using track your performance of your Bitcoin, but also learn how to use it. Once you learn how to use your Bitcoin, that's when you go to the next level. That's when you truly become a Bitcoiner. You're no longer a speculator. You're actually a participant in the network.
Yeah, I love that. My audience often hears me say Bitcoin is not a trade, it's a revolution. And, the likes of the Bitcoin way and people like Jeff Booth, they advocate the same thing all day, every day. They want people to see that what Bitcoin actually is something unlike any other asset that we've ever seen before in history, right? Because it is completely decentralized. Nobody controls it. Yes, it's a part of the financial system in terms of market exposure, but I would argue that the traditional financial system doesn't quite know yet how to value Bitcoin, and this is why we see these wild fluctuations in price. But, if you buy one Bitcoin, regardless of the price of it, you still own one Bitcoin, right? So it's just so important for the listeners to really keep remembering that Bitcoin is not really the volatile asset. There is only 21 million Bitcoin, right? There's 2.1 quadrillion Satoshis, 100 million Satoshis per Bitcoin. We're going to enter a phase in the next, I would say within 5 years, maybe within 3 years, because we know all of the infrastructure is being built right now that's going to really fast track this peer-to-peer global free market economy where you can go down to your local hairdresser or mechanic, coffee shop and exchange, sats, actually spend your Bitcoin. And so, yeah, I agree, Bish. I think it's so important that we stop looking at Bitcoin as solely number go up, right? And as an investment, and we start really positioning it in our mind for what it was intended. And that is as a revolutionary way for us to interact and transact value peer to peer with no counterparties to our money, no middlemen, no institutions that can tell us what we can and can't do with our money, as we're seeing in many of the Aussie banks right now. And so, this is a time where many people who have treated Bitcoin just as number go up, just as a trade in the past, this is the time where they really should be thinking beyond that, don't you think, Bish? And looking to the future and seeing it as an opt-out, seeing it as a way to protect and park their savings. I mean, imagine if the Canadian truckers, and I don't want to get too conspiratorial or anything here, but, we all know the events of 5 or 6 years ago and how disruptive that was. But those Canadian truckers, they were exercising their right to peacefully protest, right? They were fed up with what was going on and nobody was listening to them. And they just wanted to go back to work. So they go and do this protest. They set up a GoFundMe page, right? And they raise, I don't know, I think it was in the millions of dollars. And then it was all shut down. I mean, if those people were funded with Bitcoin, they couldn't have shut them down, right?
Correct. And I mean, something that I wanted to touch on that you mentioned there as well, which was, this is an asset class that has been severely misunderstood. And I like the fact that you said that the traditional markets don't know how to price Bitcoin. We've been pretty much trading in lockstep with the software ETF in America, right? Literally lockstep, within a 0.9 correlation, right? That's how tightly correlated we have been towards software. We are seen, whilst Bitcoin is an operating software, it is an open permissionless network. So yes, whilst you and I can download Bitcoin Core or Bitcoin Knots and we can run an instance of our own and we can run that software ourselves and write code, and then if the code is accepted, we can make changes. But reaching consensus is hard because of the decentralization aspect, which is a good thing. Nobody can just write changes to the code and then it's changed. So a lot of people don't understand, especially our TradFi counterparts, don't know how to price Bitcoin. Is it an asset? Is it a currency? Is it a technology stock? Is it a software? What is it? It kind of sits in all of these different buckets. It sits in all of these different categories, and yet
Jeff Booth refers to it as a protocol, not a technology.
Yeah, and it's a base. It's a base layer,
like the internet, right?
Correct. And I think that it's very hard for it to be modeled. There's no discounted cash flow analysis that you can apply to it. There's no rental income that you can apply to it in the vis-a-vis the case of real estate. There's no yields that you can kind of extract from it. It's a monetary asset similar to gold and silver, but it doesn't have the physical properties that gold and silver have. Therefore, people don't know what it is that they're holding, right? They're holding these UTXOs in their wallet, and that's it. That's all that they can really engage with is a number on a screen. But what does that number on the screen represent? It represents true permissionless value that can then be sent and received anytime, anywhere. And again, I just want to really hone in on the fact that it's pretty impressive how you just said the traditional markets don't know how to price Bitcoin yet. It sits in so many different categories and it's so many things at once that whilst we have been correlated as a high beta technology stock, I believe the world will come to understand Bitcoin as a monetary asset in due course. And what that will trade like, what that will look like in the future, I'm not too sure, but it will involve a significant markup in value. That's what I'm saying.
So Bish, what do you think the impact of all these ETF inflows and these treasury companies? I mean, we saw Michael Saylor's company Strategy, I think just last week or the week before, accumulated another 3,000 BTC at about 200 million. So they're just stacking. I heard Mark Moss this morning on Patrick Bet-David's podcast saying that he thinks that they're going to get to 1 million Bitcoin. But what do you see the impact of this? What does it mean to the everyday Bitcoiner, the retail hodler? Do you see that the fact that these institutions with seriously deep pockets who are scooping up this available supply, do you think that's going to change the overall ethos? Do you think that we're going to have this faction of society or faction of Bitcoiners that are just hardcore peer-to-peer opting out kind of Bitcoiners, and then everybody else, the only way they're going to get exposure to Bitcoin is via an ETF or a treasury company? How do you see that?
I don't think that's going to be our future in terms of you're going to only get access via intermediaries. There'll always be a spot market. There'll always be a peer-to-peer market. There'll always be brokers like myself willing to go out and scoop up Bitcoin on your behalf and then post it to your cold wallet. In terms of how it will work, though,
but at what price?
A significant markup from where we are now, right? Especially with the amount of governments, ETFs, institutions that are piling in right now. But they're not going to deploy capital willy-nilly. They're going to be far more measured. They'll wait until prices come into what they feel is fair value. I believe we're heavily discounted from fair value at the moment. So yeah, you'll be buying it at much higher prices. But the point being is that you got to look at gold, for example. Who are the largest holders of gold? Central banks. Central banks are the largest holders of physical gold. They hold it in the tons. The People's Bank of China have been buying gold on a record spree, dumping US treasuries and buying gold at record rates. The US Treasury now controls all the gold. They redeemed it or received it from the Federal Reserve, and they've been holding that gold since the 1960s. Now, what people need to understand is that the largest holders of gold on the planet are central banks. But gold bugs are the first people to tell you end the Fed and end central banks, right? They've been fighting this sound money fight long before us Bitcoiners had the privilege of joining into the fight. We're just the more energetic, scamperous younger brother compared to our gold bugs, right? But in terms of how it all operates, it's the same value system. That gold is owned and controlled and managed by the most wealthy, the elite, the super powerful. And I do apologize about any background noise. I'm on Albert Park. and my office is on
Formula
Queen's
One.
Road. Formula One's on. It's actually the Carrera Cup at the moment. They've got GT3s ripping around the track. It looks awesome. So I'll be going there with my son over the weekend, but I digress. In terms of how it all operates, though, is that the largest holders and concentration of gold is in banks and institutions. That's where gold is concentrated. However, there is a small subsect of the holder base, which is your gold bugs, your preppers, your doomsday guys who are just holding physical gold and canned beans and sitting with a rifle in their underground bunker waiting for That's what's going to happen with Bitcoin. There's going to be a really clear distinction between the holder base, where you'll have your hardcore Bitcoiners who only eat steak and work out every day, your Safer Deans of the world, your Robert Breedloves of the world. They're going to be doing that. And then you're going to have your suited corporate Bitcoin holders out there, your institutional holders, and eventually central bank holders of Bitcoin as well. So again, I don't really see the concentration of the holder base, that being the institutions, as somehow detracting from the ethos of Bitcoin. Just like the same way that the largest holders of gold are central banks, but the ethos of gold holders, at least on a community or individual level, is that of freedom, individuality, and sovereignty. That's the best way I can describe how Bitcoin will trade in the future.
Yeah, really interesting, mate. And I was listening to an interview yesterday, Natalie Brunel, who, of course, is the host of the Coin Stories podcast, one of the most popular Bitcoin podcasts globally. And she was interviewing a gentleman by the name of Stafford Massey, who's actually the chief executive officer, I believe, of the African Bitcoin Corporation, which is a private treasury company in Africa. And really interestingly, he was saying to Natalie how in Africa, they see Bitcoin as a survival tool. They see it as a safe haven. In Africa, of course, is a country whose currencies over the course of time have been hyperinflated more than probably most throughout the world. But interestingly, he said point blank to Natalie, he said, we come to America and we don't quite understand you guys, the way you see Bitcoin. You're always worried about the number go up and pullbacks and, Bitcoin's volatility. We just see it as a UTXO, as a way to protect and preserve our savings that is completely detached from the system. So for us, it's like the lifeblood of our ability to survive. And this is kind of where it's all going in Africa. So I thought that was really fascinating. And, I guess this speaks to what you were saying. There's going to be those two factions moving forward.
Yeah, I mean, and you don't have to look, really far as well. In Iran, for example, they're going through this horrible conflict at the moment. Say what you will politically, one way or the other, but innocent civilians are caught up in this. They've withdrawn Bitcoin from exchanges at rapid rate, at least even the Iranian exchanges, in order to, try to find a way to preserve and hold themselves through this conflict. You've got people all across South America who, their local currencies like Argentinian pesos worth nothing, right? And it's been hyperinflated to oblivion. People hold Bitcoin there in a meaningful way. My family comes from a Lebanese background. The Lebanese pound has lost all of its value. And right now the south of Lebanon is getting shelled like to oblivion. But people are using Bitcoin as a lifeline, as a way to protect and preserve them, help them get out of a country that's in conflict zone, and to navigate a really tumultuous period of time. So whether you're experiencing an economic hardship like the Argentinians did, or you're experiencing a physical conflict like a hot war in your backyard, you can use it as an asset and as a currency to get out of Dodge and get your family out of harm's way. The Africans have obviously found Bitcoin as a fantastic peer-to-peer currency. Something that's really interesting to note is majority of Africans got access to a mobile phone, but don't have access to a landline. Right, and so they all, understand this mobile technology very well, but they never went through the instance of technologies that we experience. They never experienced the fax machine, at least like en masse, right? I'm sure there was pockets that did. They never got to experience the landline. They went straight to mobile phones when it became ubiquitous and easy to use. Same deal with Bitcoin. It's gone straight towards the people, and that's how they transact with each other. Because across the African continent, there's not a single currency on that continent that has any value whatsoever, right?
Yep.
It's all
and most people were unbanked, right?
Most
They
people
never
are
had a bank
unbanked,
account. Yeah.
never had a bank account, but you can jump on your phone, have access to a spot of data, spot of Wi-Fi, and there you go. You've got access to the world's financial system. So Bitcoin is delivering on its promise of being a peer-to-peer electronic cash, and the fundamental mispricing that is happening right now between Bitcoin's true value and its market price should be taken advantage of by every single investor who's listening to this chat right now, because you don't get many opportunities to buy an asset like Bitcoin at severely discounted levels or extremely distressed levels. The last time we were here was 2022. The time before that, 2018. So if you want to buy Bitcoin at the next distressed level zone, you are, if history was to reflect anything, you'd be waiting on, say, call it 2030 to be able to buy up Bitcoin at the next discounted price point. But that distressed asset level, it might be $500,000, right? And then people are going to be absolutely dooming and glooming because Bitcoin hit $800,000 and now we're trading at 500K. Everybody thinks it's over. The next level down is 300, then 100, then 0, right? That's exactly what's going to happen. Don't let yourself get caught up in this, debacle of lower and lower prices. And then when the market resolves itself and resumes its uptrend, and we end up posting new all-time highs, don't deploy your next set of capital then, because then you're probably going to have to wait 3 to 4 years to experience your next win on the board.
Yeah.
Do it now so that way you can take advantage of severely discounted levels, but do so within your means. Do it reasonably and do it in a way that makes sense for your overall portfolio. Because for me, a nice, calm, measured approach is better than just one which is just like fueled by, FOMO or fear or greed. Understand what it is that you're investing in and then keep on building on it, use it, and understand that this isn't a technology that's going to disappear anywhere. It's not a protocol that's going to disappear anywhere. The market price will change. The value of the Bitcoin, the clearing price of Bitcoin will jump around, but the actual market, the value of Bitcoin will continue to accrue to the upside.
Yeah, and just for context, guys, you can buy $1,000 US today will buy about 1.4 million Satoshis. And for our Aussie listeners, 1,000 Aussie dollars today, somewhere around 900 to 950,000 Satoshis. And, I'm in the camp that there's going to come a day where one Satoshi will be equal to $1. Now, it might not be in our lifetime. Maybe it's going to be in our kids' lifetime. But when you understand Bitcoin and the way that it is mathematically engineered to absorb the financial premium out of the fiat system, you realize that it's inevitable that we'll eventually get there. Just keep that in mind. $1,000 today will get you somewhere between 900,000 and 1 million sats. And one day those sats could well be worth $1 million at some point in the future. So it's a good way of looking at it. So Bish, just as we sort of get to the back end here, what do you think people should be focused on right now? I mean, I think it was great there that you just said, just be methodical, stay within your means, be future focused. Is there anything else you want to add? Do you think it's a good time for people to be, getting really comfortable with the idea of self-custody, maybe sending or receiving Bitcoin, doing a bit of extra study? What do you think?
Yeah, I mean, the beauty about Bitcoin is that it's easy to interact with, it's easy to engage. And I think what people should be focusing on is, number one, buy. Take advantage of this discount. Buy with proper conviction. And of course, within your means, not leveraged. Come to Stormrake ideally, use us and buy some unencumbered Bitcoin and chuck it in your cold storage. But don't just use it as a digital collectible. Don't let the UTXOs just gather dust in your cold wallet. That could be where 80-90% of your wealth sits, and put a couple of percentage points on a phone wallet or a hot wallet of your choice, right? And then go out and use it, and again, in Australia, we don't really understand the Bitcoin use case as cash because, we have never had to worry about our banking system or our banking sector melting down, but here's something that I think a lot of people would like to listen to and should appreciate. Most Australians are leveraged on their real estate, their primary residence, right? and their income to that asset value is 10 to 1, right? Most property values are 10 times larger than people's incomes. And Australian bond yields continue to rip. We're going to see mortgage rates increase significantly in this nation. And people who are leveraged to the hilt on property are going to experience real estate volatility like no tomorrow. We've created our own subprime mortgage crisis here in Australia because we've lowered the capital deposit requirements to 5%, and 2% for single mothers, which sounds good on paper because every single mother should have the ability to provide for her children, but straddling her with a 98% loan to value ratio loan is
mortgage insurance
is predatory, in my opinion, and it's not something I encourage. And I think a lot of folk will realize what they're doing with their property investments here in Australia is quite reckless in due course. But unfortunately, just like the global financial crisis, the onset of it was the subprime mortgages in America, which was then massively ballooned by the derivatives market that was trading around it. And then when the underlying mortgages collapsed and the global financial crisis kicked off, we won't have that same order of magnitude on the global financial markets, but we are going to experience a severe Australian housing correction at some point. Now, this is caveated by me saying, unless they choose to have really reckless monetary and fiscal policies to support the housing market, and in which case the housing market can be saved at the expense of the Australian dollar. And if we save the Australian housing market at the expense of the Aussie dollar, then those who are going to be absolutely destroyed are savers and middle income. So they're going to sacrifice middle Australia in order to protect the property holders. But you can protect yourself by not getting into the property Ponzi and buying Bitcoin, because if they're going to sacrifice the Aussie dollar to support and save the housing market, and by extension the commercial banks, which are heavily exposed to the Australian residential mortgage sector because they own almost all of them in terms of who owns the mortgage books in Australia, it's pretty much the big four banks. And what will end up happening is they'll sacrifice the AUD, the Aussie dollar, in order to save the housing market, in which case gold, Bitcoin, and all other hard assets are going to absolutely rip to the upside. And I'm more bullish on Bitcoin in Aussie dollar terms than I am in BTC USD terms. Still bullish on Bitcoin in general, don't get me wrong. Whichever currency it's trading against, I'm super bullish on Bitcoin. But I believe that Bitcoin in Aussie dollar terms is going to absolutely outperform Bitcoin in USD terms. Because let's say we go up a factor of 10x in BTC USD terms, I expect a matter of 14 or 15x outperformance in AUD terms, because the Aussie market is completely exposed to this housing Ponzi, and the only way to sustain it is by sacrificing the Aussie dollar in order to protect mortgage holders. That's the only way we can do it.
Interesting stuff. Well, Bish, I really appreciate you coming on, and I'm sure the listeners have got some real insight from you today. Maybe we can end with what you see for the next 6 to 12 months. Is there anything on the horizon that kind of excites you or worries you? What should we be looking out for? You've given us some strategic advice to just kind of keep our head down, but is there anything sort of that you're seeing that is concerning or something we should be looking forward to?
Yeah, I mean, we're right now staring down the barrel of a midterm election year. We have to understand that they are just around the corner from cracking $39 trillion in national debt in America, and they have to refinance a third of it. The only way they can do that is either through hyper-growth policies, such as becoming the AI, robotics, and crypto capital of the world. That is the language of the Treasury Secretary and the President, not myself. And then cutting interest rates. So in that environment, plus they've now got this inflationary war that's being underway. They're spending close to $1 billion a day to fund it, and they didn't go through any congressional approval. They've just kind of done fly-by-night Operation Epic Fury, as they call it, and are now embroiled in another forever war in the Middle East. With all of that in mind, there are so many pressures pushing Bitcoin to the upside. There is some manipulation and suppression around the margins. There's been Jane Street, which is speculated to have caused and exacerbated the sell-off of Terra Luna, which was the onset of the 2022 bear market, and they are now also suspected to have played a significant role in October 10th. Again, quite a matter of speculation, but if the suppression and the manipulation is removed, at least for the short time, and there's all this immense pressure to the upside, the best way I can describe it is it's keeping a beach ball underwater. So what I'm looking forward to is new all-time highs in Bitcoin within the next 12 to 18 months. That's a conservative estimate. I genuinely think that within a year to a year and a half, we could realistically see new all-time highs in BTC. And that would be, something that I could stand by. Might not be in 2026 that we see it, but it could be 2027 or even early 2028, depending on certain conditions. And we've got the opportunity to buy Bitcoin at immensely discounted levels. You're buying the 2022 high. Now, this reminds me and is incredibly reminiscent of the 5-year cycle between 2018 towards 2022, 2023, because the 2017 peak was $20,000, right? And then the 2022 low was $15,000, right?
Right.
So we had gone below the previous all-time high, and then we had then ripped up to $126,000. Now that same stretch has occurred between 2022 and 2026, where we've gone to a high of 126,000. We've posted a low of 60 when the previous all-time high was 70,000. Again, similar discounted levels between 20,000 to 15,000 as we are between 70 to 60K. And we are positioned quite nicely for another run to the upside. Does that mean that it's 50K is ruled out? Definitely not. There's an ongoing conflict that can exacerbate issues, right? But nonetheless, we are so close to a low that deploying capital here is an incredibly attractive idea, and anybody who takes advantage of it will be seen as the 2022 bottom buyers of 15,000 in a few short years' time. And I think that's something I can stand by.
Yeah. And I believe that we're below the 200-day moving average as well at the moment, which historically has represented a great buying opportunity. So great things to keep in mind. Bish, just finally, how do people access your services? What's the best way for them to set up an account, to find out about what you guys do, how you can assist, and also maybe speak to also you guys launching in the US, because I know I have a lot of US listeners who are eager to find out more about your launch in Dallas.
Yeah, thank you so much. Look, you can find us at stormrake.com. You can email us at trade@stormrake.com, and you can contact us with the number on the website. You can also book a consultation with myself on the website. Just mention that you've came to us from Zane and the show so that I can give you the discounted rate, which takes a brokerage from 3% down to 2%. But please open your accounts before June 30th. Anybody that opens their accounts before June 30th will lock in that 2% rate, because pretty much as of July 1st, our brokerage rate is going to be 2.5%, which will be our headline rate in the United States. But for our American listeners, I'm opening my office in Dallas in the end of April, start of May, and we'll be open for business for 49 out of the 50 states, all states bar New York. But don't worry, New York, I'll come to you hopefully by the end of the year, and you guys can do business with me straight away. We're already regulated, we're already insured, and we're fully federally covered, so you know who you're dealing with, and that's a really exciting time for us. So come through. We'll be open for business come end of April, start of May. But if you open your account now, or at least put in your expression of interest today, you lock in the 2% rate as well, because come July 1st, we're moving towards 2.5%, which will be our new brokerage rate for all of our clients. Granted, if you open it now, you're going to get grandfathered and locked in at 2%. That rate won't move on you. That is an absolute guarantee from myself. I'm the executive director, one of the owners of the business. We will not move the rate on you, right? But as of July 1st, it's going to be 2.5, and come hell or high water, I can't move it for you. It's something that we have to do in order to remain competitive. And keep in mind, we are not charging you any spreads or price premiums whatsoever. Whatever price I can get from my OTC desks, whatever price I can get from the exchanges I'm plugged into is the price that I get you. I do not make any money on the Bitcoin price purchase whatsoever, or the Bitcoin sale price as well. If you're selling Bitcoin back to me, I do not charge you a spread. I do not charge you a price markup. It's only the flat fee commission. But if you open an account with us, for our American listeners and our Aussie listeners as well, you get locked in on Zane's 2% rate. Come July 1st, it's 2.5. But take advantage of it. Even if you don't use the account, at least open it so that way you can lock in a great rate. And then come a time when you see yourself needing a broker, you can give me a call and you can use that 2% brokerage fee.
Brilliant stuff, Bish. And for the listeners, for those of you who haven't experienced Bish's services yet, and the team at Stormrake can highly recommend it. It's a first-class service. I use them, my family uses them. Dozens and dozens of people have gone to Bish that I've spoken to and consulted with over the past 12 months, and you get nothing but 5-star reviews because you guys essentially offer a white glove service. It's kind of an old-fashioned hold your hand kind of service where you're able to speak to a real person. If there's any roadblocks in terms of getting money out of your bank, you guys coach people through it, help them through it. So it's really a frictionless way to buy Bitcoin. And then ultimately, once you've got your Bitcoin, if you're wanting to withdraw it into your own self-custody, you can do that, or you can keep it with Bish for a period of time. They also have a cold storage in-house service, but they'll also help you through a very simple process to withdraw your Bitcoin into your own self-custody. Again, a white glove service, which exchanges don't offer. So it's I think for particularly newbies, Bish, coming into the space, what you guys offer has proven to be a really kind of anxiety lowering type service, because when people are new, there's a few moving parts.
Especially navigating the banks. That's a big one.
Yeah. So Bish, thanks for your time. I really appreciate it. You guys, thank you for listening. Thank you for tuning in. If you'd like to continue to support the work that I'm doing, support the show, remember one of the best things you can do is to leave a comment, but most importantly, to subscribe. When you subscribe, you help grow the channel, grow the mission of the channel, which is all about education, and you help me to continue to attract world-class guests such as Bisher Khudeira from Stormrake. Thank you so much. This is Bitcoin with ZT, where real conversations meet real conviction. We'll see you in the next one.